Why India's carbon credit market is quietly betting on elephants as infrastructure, not conservation. The asset class nobody saw coming. The headline reads like soft environmentalism. Elephants protect forests, forests store carbon, elephants are good. Correct, but strategically incomplete. What the new Hindu study actually surfaces is a measurement breakthrough, the first quantifiable, scalable proof that megafauna directly increase carbon sequestration rates in tropical forests. This matters because it transforms wildlife protection from a cost center, expensive, intangible, guilt-driven conservation budgets, into a revenue-generating asset class that institutional capital can price, trade, and hedge. Here's the mechanism. When elephants forage, they thin dense vegetation, reduce fuel loads, and suppress frequent devastating wildfires that would otherwise release sequestered carbon in catastrophic pulses. They also disperse seeds across fragmented forest patches, accelerating reforestation in degraded areas. In isolation, these are well-known ecological facts. But when you quantify the carbon benefit per elephant per forest type, you unlock something new. Elephant populations become legible to carbon accountants, and legible assets attract capital flows. India's carbon credit market traded 1,247 crore rupees, around $150 million, in voluntary carbon market transactions in 2024, with projections reaching 5,000 plus crore rupees by 2028, as corporate ESG mandates intensify and regulatory carbon pricing mechanisms like India's proposed carbon tax on high-emission sectors create floor demand. The study, by suggesting elephants add measurable carbon yield to forest projects, opens a new line item in carbon project economics, megafauna co-benefit pricing. This is not metaphorical, it's tractable. Why this study timing matters right now? India is at a precise inflection point. 3 converging pressures. 1. Carbon accounting standardization. August 2026 context. The International Carbon Registry and India's Voluntary Carbon Market Task Force are finalizing methodology papers for wildlife-inclusive carbon accounting. Projects currently get credits for forest protection as a monolithic line item. A study that disaggregates elephant presence from carbon yield allows projects to bid higher in auctions, justifying premium prices for elephant-managed corridors versus standard forest reserves. Expect methodology updates within 6 to 8 months. 2. Institutional investor appetite for nature-based solutions. BlackRock, ICICI, Prudential, and SBI's climate finance division have collectively committed $8 billion plus to nature-linked financial instruments across Asia-Pacific. They're searching for non-binary risk factors that correlate to both climate impact and biodiversity ROI. Elephant-mediated carbon is exactly this. It's measurable, geographically specific, elephant ranges are defined and politically visible. No investor wants to fund a carbon project that later faces wildlife controversy. 3. State-level carbon revenue pressure. Karnataka, Odisha, and Maharashtra are racing to monetize their carbon assets ahead of a proposed national carbon tax implementation, rumored for Q1 2027. Protected areas with stable elephant populations can now credibly bid for premium carbon project funding. This directly incentivizes elephant protection via state forest budgets, no longer reliant on soft conservation NGO grants. The cross-domain cascade. This isn't just environmental policy, it cascades into 3 adjacent markets: insurance and risk pricing. If elephants demonstrably reduce wildfire carbon losses, then forest insurance premiums in elephant ranges should be lower than in elephant-depleted forests. Already a handful of parametric wildfire insurance products are being priced in South Asia. A claim that elephants reduce fire risk by 12 to 18%, plausible from the study's data, would justify immediate repricing of 500 plus crore rupees in existing forest and agricultural insurance policies. Reinsurers pricing wildfire exposure in India will demand this quantification within 12 months. Real estate and carbon offsets. Developers building projects near elephant corridors in Karnataka's Western Ghats.